Welcome to Trading Day. I'm Lindsay Biscaya. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. Ontario's projected deficit is almost double what was originally expected, with the government now suggesting it'll be more than $13.5 billion in the current fiscal year. The updated figure is nearly $8 billion higher than what was laid out in last year's budget. The province is citing trade tensions and geopolitical forces as driving factors behind the increase. China has started 2 investigations into U.S. trade practices. Beijing says the probes are to safeguard the interests of Chinese industries and are in response to investigations announced by U.S. President Donald Trump earlier this month. Now, the move comes ahead of Donald Trump's visit to Beijing in May. And shares of Brown-Forman are getting a boost today. The maker of Jack Daniels is in talks with French drinks company Pernod Ricard about a potential merger. Both companies are valued at more than $10 billion, and the deal would bring together Pernod's top sellers with Brown-Forman's brands. The talks come as the alcohol industry as a whole faces a downturn due to tighter consumer spending. And we're watching the markets closely today. The TSX now up by 0.3% after seeing some losses earlier this morning. It's interesting what we're seeing in the U.S. markets, though. Traders very concerned about the potential for this war in Iran to continue to drag on. The NASDAQ entering into correction territory, down by more than a full percentage point. And we're watching the S&P 500 as well, also down by more than a full percentage point, on course for its 5th weekly decline. Bell Mobility is selling its land mobile radio network services business to Motorola Solutions. It's a move that comes as the company's broader plan to unload roughly $7 billion in assets to help pay down debt. So here to discuss that and other major market trends of the day is Lauren Steinberg, co-president of Lauren Steinberg Wealth Management. It's good to have you join us. Thanks so much.
It's great to be here again, Lindsay. Thank you.
So we'll start with this news coming out from Bell and, of course, BCE, the parent company of BNN Bloomberg. Is this a sign that Bell's kind of doubling down on higher margin, growth-oriented areas like fiber and 5G instead?
I think it's, first of all, a sign that they're following through on their strategy, Lindsay, to reduce their debt load, which is too high. And they announced earlier that, they wanted to reduce debt by about $7 billion. This is about 10% of the way. I think it's a move in the right direction. But clearly, to your point as well, they're getting out of a very low growth business. So they're not giving up much. They probably got a reasonable valuation for it, we would estimate. And yes, they can, over time, redeploy cash. But right now, we expect the proceeds will be used to pay down debt.
Do you think that this is probably a good move for the company?
I think it's a good move. We're a shareholder of BCE. And this is the game plan. They had cut their dividend earlier because it was simply too high. And investors would like to see a stronger balance sheet, especially after the U.S. acquisition. And so they're on the way.
Okay, so let's move on. We've got some other news that I want to ask you about today, and that's the Ontario budget released last night at nearly double expectations in its deficit, so a much higher deficit than before. More than $13 billion is what's expected. The Ontario government citing global economic shocks and rising energy prices for part of the reason for that deficit. I'm wondering what this means in terms of how this trickle-down effect could be seen in a greater way in the markets.
Sure. First of all, I'm not sure, part of the reason for deficit increase that we're going to see across Canada is certainly, fears of what will happen with the trade agreement between Canada, the U.S. and Mexico. And, already, a bit of the shock from job loss in the auto sector and such. I note that a little bit of money will be spent on healthcare. A little bit of money a little bit of a tax cut for small businesses in the hopes to get some hiring increases, and as well, government investment in things like AI and biotech and the like, again, to try to, I guess, create a hub in Ontario. I just think this is going to be a trend we're going to be seeing at every level of government, including the federal level.
Okay, so we'll we'll leave that there. There's just so many things that I want to talk to you about. We're going to go now to the situation in Iran and obviously what we're watching in the markets today. Markets are down once again. Prices of oil are climbing higher. What's your take on kind of the direction of the markets that we're seeing throughout really like the last couple of weeks, but especially this weekend and today?
Well, certainly. I mean, first of all, every time, the president of the U.S. opens his mouth one way or another, it can move oil prices substantially. And when oil prices go up, that is somewhat inflationary for sure. Investors will have less money in their pockets to spend. And so it's not healthy for the markets. Also, there are indications that, the Fed may actually raise interest rates sooner rather than later. That is also weighing on investors. So in the short term, higher energy prices for sure are a negative. I have to say our own view is that, probably by the end of the year or earlier, there will be some kind of resolution in the Iran and Middle East situation, and oil prices will come back somewhat, and investors will focus once again on corporate earnings.
Do you think that will take a while, though, for oil prices to come back down even after there's a resolution? Because there now needs to be a build back of all that infrastructure as well.
So I think it's a great question, Lindsay. Thank you. I think it depends on, will there be more damage or have we seen the bulk of the damage? For sure, if there's serious, significant more damage, it will take longer to come down. But I will also add that, part of the increase in oil prices is due to speculators and hedge funds loading up on oil futures. So, if and when this conflict ends, some of that speculative money will come out of it and will undoubtedly bring oil prices down quicker than we might expect.
You have also noted that corporate profits are still expected to grow more than 10% this year. So just in terms of what we're seeing with the markets right now, why aren't markets giving more credit to that strength in earnings that we're seeing given the uncertainty backdrop we're seeing elsewhere?
I think there's a couple of reasons. First of all, AI is impacting the technology sector. So that AI is impacting the technology sector, and therefore the earnings growth of those companies is basically irrelevant to the share price. So we're seeing, all kinds of software companies get hammered, even though their earnings are still growing at quite a healthy clip. That is certainly a major reason, and those companies make up, of course, a healthy percentage of the S&P 500. The other issue is, of course, uncertainty from the Middle East situation is weighing on markets as well. Higher oil prices, if they continue, will negatively impact consumer spending. And so, during this period of time, you don't just have the AI issue, but you also have the uncertainty possibly putting pressure on consumers.
We're also watching the price of gold today as well, oil pushing higher. Gold has been falling. It was up this morning. But what does that say in terms of gold being kind of like an inflation hedge?
So I think this whole, area has kind of shown that gold is not a great inflation hedge. And in fact, we look up the run up of gold prices from, the $3,000 to over $5,000 level. So much of that was due to a massive inflow of investor money into gold ETFs. And all of a sudden, despite higher oil prices, we've seen, a 20% or so unwinding of the gold price. And when this kind of thing happens, over time, we would expect to see those same investors who piled into gold ETFs, over the last 12 to 18 months, probably scale back. And we would not be surprised at all to see gold fall back to the $3,000 level.
I just want to go through some of the stock picks that you have, because you mentioned some decade-low valuations in what you call left-behind stocks. I don't think we have time to go through all of them at this point, but if there's a couple that you like and want to point out and tell us why you think they're left behind.
Sure. So certainly Nestle is the world's largest food company. 25% is coffee. They sell, besides Nespresso, all the coffee sold by Starbucks outside Starbucks stores. 20% is pet food, which anybody who has a pet, this is a huge growth area. And Nestle is selling at a 10-year low with a 4% dividend yield. They have new management. Growth is finally returning to the company, and we look for the stock to double over the next 5 years.
There's also, continue. Yeah, which one do you want to go to next?
I'll have to say Adobe, because Adobe is getting crushed because of AI. Selling at half the value it was 5 years ago, yet Adobe continues to deliver double-digit revenue growth, double-digit earnings growth, And with the stock price depressed, they bought back 6% of the shares outstanding last year. And if this continues, they'll buy back more than that this year. And this just looks like such a compelling acquisition opportunity for investors that it's one of our best picks for the coming 12 to 18 months.
We'll do one more, and that's the Walt Disney Company.
Who doesn't love Walt Disney? So Walt Disney is trading at only 14 times earnings. Of course, they have a brand new CEO. But the big thing with Walt Disney is earnings. The streaming business went from losses to earnings. We're looking for earnings to double over the next 3 years. We're looking for earnings for this company to be up 30% over the next couple of years due to continued growth in theme parks, streaming, and the networks and ESPN business seems to have bottomed out, is also on a growth path. And so a chance to buy one of the world's great businesses, which is truly on sale.
Okay, we'll have to leave it there. Lauren Steinberg, co-president of Lauren Steinberg Wealth Management. Always great to speak with you. Thanks so much.
Likewise, thank you so much.
Coming up, we will bring you our conversation with Christian Wiedebroek, CEO of Xanadu at the NASDAQ. Right after this, stay with us. Canadian quantum pioneer Xanadu Quantum Technologies hits the public markets today, debuting on both the NASDAQ and the TSX. And to discuss how the dual listing could reshape the race to commercial quantum computing for Canada, we were joined earlier by Christian Wiedebroek, CEO and founder of Xanadu Quantum Technologies.
Basically, there's a few different ways to build a large-scale quantum computer, which is what we're all after. So far, though, one of the most promising, if not the most promising approach is using light or photons, which is what Xanadu does. And that's not represented before today on the public markets. There's other approaches. And so this is a really exciting time for Xanadu, for Canada, and really excited to be on the NASDAQ and TSX.
As you say, there is other approaches. So how is that different from like superconducting or trapped ion approaches, for example?
Yeah, you can think of building a quantum computer either out of two buckets, one using photons, which is what we're doing, or one using electrons, so electronics essentially. And the superconducting and neutral atoms and so forth fit into that bucket. So it's a very different way of doing it. The reason why we're doing it this way is we've essentially solved scalability, meaning the end vision is to have many quantum computers, smaller ones that are networked together. Xanadu is the only company or entity anywhere in the world that's actually solved that problem. We solved that last year. And the ability to operate and perform at room temperature, we're the only company that can actually truly say that. So there's a lot of benefits to using a light-based approach.
Let's talk about some of those benefits first of all. What are they?
Yeah, room temperature computation is really important. We do need some cooling, but it's really at the very start of the computation, before the computation even starts. And so after that, the qubits, the gates, and the measurements, all at room temperature, and that allows us to save a lot of money, allows us to move much faster. The other big one is scalability is achieved through networking. Photonics is really ideal to do that, and we're the first to have achieved that. And finally, when it comes to mass manufacture of the chips, we can actually work with, and in fact we do work with, a lot of large-scale chip foundries out there in the world. And so we're one of the few companies that can actually say that, particularly when it comes to high-volume manufacturing. We're in a key position there.
And what does quantum computing actually help with that people can see in their everyday life? Like I was reading, it can help with new drugs. It can help with certain types of batteries. Is that right?
That's right. These are the things that why we're excited, investors are excited, and it's really great to be part of a field that's really going to revolutionize industries such as, like you mentioned, drug discovery, pharmaceuticals, material design. So we're actually working on next generation batteries. How do you ultimately create a battery that's 10 times faster to charge, 10 times longer range on a single charge, while still maintaining its safety properties? And then also next generation solar cells as well. Beyond that, artificial intelligence, finance, and so forth. So very big industries that will ultimately affect everyone in the world.
This is the first publicly listed pure-play photonic quantum computing company, right? Your company, you're listed now on the NASDAQ and the TSX.
That's right.
I wonder, what does that signal about the industry and where it's headed?
Yeah, I think it's signaling to the industry that we're not too far away now from the end vision of having a large-scale quantum computer. We publicly stated that we're aiming to achieve that in 2029, 2030, and build our first, what we call a quantum data center in Canada, in Toronto. And I think the other thing this signals is, from what we've been told, this is the first quantum tech company to be listed in the last 4 or 5 years on TSX as well. So hopefully we're starting to sort of the next momentum, next wave of quantum tech stocks on TSX. So it's an exciting day overall.
In terms of that dual listing, like what does each market give you in terms of like investor access and visibility?
Well, first off, we're proudly Canadian, so it was never a question of whether we should be dual listed. We're proudly Canadian. We're getting a lot of government support, and we want to show our support for Canada too by being listed on the TSX. And that's important to us. It also hopefully will open up, there's pension funds, large pension funds in Canada. Hopefully they'll start to take more of an eye on us, given some of them have the mandate to invest more in Canada. So I think the access to capital and the proud nature that we have of being Canadian go hand in hand.
And when it comes to talent, like how does Canada stack up, and who do you compete with the most when it comes to actually attracting talent?
Yeah, it's a good question. We often hear about the brain drain. I think Xanadu has done well by having the brain gain. I founded Xanadu in 2016, and since then we've got nearly 300 folks. Roughly half of them actually come from Canada, and the other half come from overseas. So I don't think it matters where you are. If you collect really, really awesome people and awesome talent and put them together, it automatically attracts some other really great people from around the world as well. We also have folks in the US, Australia, and Europe, and so we're well positioned to be one of the leaders, if not the leader, in quantum computing over the next few years.
And you're also already working with a number of companies, is that right?
Yeah, we work with a lot of companies. So we work on the chip designs of the photonic integrated chips. We design them ourselves and send them off to different foundries around the world. Once we get them back, we do everything ourselves. But the foundries are different parts of the world. There's like 3 in the US we work with. So that supply chain is very strong. But also from the commercialization side of things, we work with Volkswagen, BMW, Rolls-Royce, Toyota, and many others, working on the applications that I mentioned for next generation batteries and so forth.
That was Christian Wiedbroek, CEO and founder of Xanadu Quantum Technologies. Up next, how Canadian businesses and its consumers can protect themselves from cyber attacks as geopolitical tensions rise. More on that coming up after the break. Rising geopolitical tensions are leading to a surge in Iranian-linked hackers driving AI-enabled cyber attacks. For more on how this impacts Canadian businesses and consumers is Raoul Power, CEO of Redsift, and he joins us now. Good to have you. Thanks for joining us.
Hi, Lindsay. Thanks for talking.
This is very interesting. Tell us right now, like, what's happening with Iranian cyber attacks and what we need to understand in terms of how it's working.
Okay. Well, I think first it's just important to level set. So Iran does have a track record of disruptive cyber activity. So unsurprisingly, it's fair to sort of be concerned, given the current geopolitical situation, to say, what does this mean for us over on this side of the pond? However, I don't think, and I don't think most of the colleagues that I've talked to think that we're in for some sort of wave of like cinematic, cyber attacks originating out of Iran, taking down every business. I think the reality is probably a little bit more prosaic. So, obviously, because of the actions in the region, Iran's connectivity and command and control structure has been degraded. So some organizations have reported that they've probably lost somewhere between 1% to 4% of their internet connectivity. So I think the ability to actually conduct these very sophisticated, coordinated attacks is slightly diminished. But that being said, there is quite a lot of risk. And we've seen some of these attacks sort of coming out in the real world recently. But they tend to be sort of around the basics, right? You see a lot of denial of service. You see a lot of hack and leak kind of operations, phishing, scams, those sorts of selective destructive attacks are on the rise. Recent research showed sort of 7,000, 8,000 conflict-themed phishing lures coming out. So people are using this sort of uncertainty to try and get people to, click on links, fall to scams, et cetera, so that they can escalate the attacks. And those are the sorts of things that businesses and consumers need to be concerned about.
Are there certain organizations and businesses that are the main target here? Like who is the target on, as you say, on this side of the pond?
Well, so understandably, organizations that are really impactful when it comes to public trust, public services, so obviously financial services, healthcare, public organizations, those sorts of organizations are really very visible and very impactful if disrupted, right? We saw the supply chain attack over on a medical device company like Stryker, right? And that had real impact in the region. So those sorts of things are what we can expect. But I think something that the public doesn't quite fully get right is it's not really organizations like hacktivist groups and state-sponsored actors going out targeting specific organizations. It's more a question of going out there and figuring out what's available. Right. So if you happen to be in an organization that isn't doing the basics right, has unpatched vulnerabilities, isn't up to date, doesn't have the right security posture, then you're going to be the easy target. And as a result, most likely you're going to have some sort of cybersecurity incident.
So with that in mind, then I guess what can Canadian companies do to protect themselves and make sure that they're not the target?
Well, it's a very good question. And frankly, we've been working in cybersecurity for over 50 years at this point in one capacity or the other. And the reality is really about doing the basics excellently and doing it with urgency, which is, I think, the thing that comes up every time, right? This is not new. We've had a lot of black swan events over the last 5 years, starting with COVID, with everything else that's happened. And every time there is a huge new wave of activity. Now we're in, of course, in an era where this is all AI powered and it's happening a lot faster than it was happening maybe about 3-4 years ago. So I think the onus is on everyone to really make sure that their organization and their personal security online is well protected against these types of attacks. I think just this morning, Kash Patel's personal Gmail got hacked, right? So it's kind of everyone, right, via every angle. So I would suggest that organizations and individuals really sort of focus on the basics. And the basics for someone like me would be, if you're just a personal user, make sure that you're using two-factor authentication. Make sure that you're not clicking on links that are unfamiliar, sort of that age-old advice. Mm-hmm. If you're an organization, it gets a little bit more complicated, obviously, but you want to make sure that you've got strong security posture. Make sure that you can't be easily impersonated. Make sure that you have solutions in place to watch the internet for people who are trying to attack you and compromise your systems and trick your supply chain, and ensure that you have a proper sort of 2FA strategy across all your entire organization.
I want to pick up on something you said a few minutes ago. You talked about how this current threat landscape is AI exacerbated. And I'm wondering, do you see a widening gap now between organizations that are using AI defensively and those that aren't?
Oh, yeah, absolutely. Because think about what's happening in the world, right? The AI is making it so that the cost of attack is effectively trending towards zero. Now, if the cost to defend against that is, legacy, if you're still using, a lot of human infrastructure in place, you've got these large security operations teams where you have humans that are trying to stem the tide against AI-powered attacks, then just, economics is not going to play out in your favor. We've seen that in the battlefield, and we see that now online. So clearly, organizations that really want to be able to stay ahead of things, stem the tide, have to use much higher velocity, machine speed kind of AI agents to deal with what is coming their way.
You've also warned that Canadian organizations, especially those tied to critical infrastructure, should be on high alert. So what makes Canada a meaningful target right now?
I think all of North America and Western Europe is a reasonable target given the circumstances as they stand. And the truth is that most of these societies that we are a part of are highly dependent on digital infrastructure. So, one might say a hospital, for example, isn't really online, but if their online operations get dramatically disrupted, it has a real impact on people's lives. That's the world that we now live in. So every business is deeply digital and deeply connected. So any attack against these businesses has a real impact on people, their lives, their health, and their happiness.
That's so interesting. Okay, we will have to leave it there. That is Raoul Powers, CEO of RedSift, joining us to break that down. Appreciate your time. Thanks so much.
Thank you.
After the break, we will bring you the latest headlines from the BNN Bloomberg newsroom. Stay with us. That's next. China has started 2 investigations into U.S. trade practices. Beijing says the probes are to safeguard the interests of Chinese industries and are in response to investigations announced by U.S. President Donald Trump earlier this month. China has expressed a firm opposition to America's investigations, and this move comes ahead of Donald Trump's visit to Beijing, which is in May. Bell Canada is selling its land mobile radio network services business to Motorola in a deal worth $675 million. The business provides two-way communication services such as walkie-talkies and push-to-talk systems. Motorola's CEO says the acquisition will help protect long-term resiliency. The deal is expected to close in the fourth quarter of this year. BCE is the parent company of BNN Bloomberg, of course, through its Bell Media division. And Halifax-based real estate company Clark is buying the Revelin Properties REIT in a deal valued at $1.1 billion, including debt. The transaction is expected to close in the second quarter of this year. The chair of Revelin's board says the deal is in the best interest of stakeholders as the company continues to face solvency and leverage challenges. And we're watching the TSX today rebounding a bit after selling off by almost 500 points last night. You can see it's up ever so slightly at the moment. Even slight gains might be better than what we're seeing in the U.S., though, with U.S. markets at least. The NASDAQ in particular entering into correction territory today. And we're also watching the S&P fall by, last we checked, more than a full percentage point for all of these stocks. The NASDAQ down by almost 2% at the moment. For the first time since the Cold War, Canada has hit its target of spending 2% of gross domestic product on defense. That's an increase which is expected to transform our armed forces. The benchmark, which was set by NATO, amounts to more than $60 billion a year. CTV's Judy Trin now on the spending milestone and what got us there.
After touring a warship, the Prime Minister announced that Canada had taken aim at a NATO target and hit its mark.
In 10 months, we have invested over $60 billion in our defense and security. And as a result of these efforts, this morning, NATO confirmed that Canada has achieved its 2% defense expenditure target.
Getting from 1% to 2% has taken 12 years. Progress has been slow until Carney's investment surge in 2025. For the first time, all 32 NATO members have reached the 2% target.
For too long, European allies and Canada were over-reliant on U.S. military might.
The 2% pledge was first made in 2014. Conservative Prime Minister Stephen Harper didn't want to do it.
I'm certainly not going to spend on a massive military expansion just for the sake of doing so.
Under former Prime Minister Justin Trudeau, Canada was called out on the international stage.
Talk about riding on America's coattails. They have the safety and security of being on our border.
Movement didn't happen until the biggest player in the alliance uttered threats.
And they said, if you don't pay your bills, we're not going to participate, we're not going to protect you.
Canada may have spent more than $60 billion on defense in 2025, but the military is still short about 15,000 soldiers, and from jets to ships to submarines, half of the equipment isn't working.
We are still waiting for new submarines. We are still waiting for new tanks and other armored vehicles for our Army. And we are still a long way from having new warships.
The overall readiness, the ability of the military to actually conduct a military operation or go to war is at a multi-generational low point right now.
Going forward, Canada and other NATO members are committing to spending 5% of GDP on defense by 2035. For Canada, that means spending $150 billion annually. Judy Trin, CTV News, Ottawa.
Still ahead, how does China play the long game against Donald Trump? Bloomberg answers that question right after the break. Stay with us. Traditional allies see the U.S. under Donald Trump as an unreliable partner. Now they're looking to hedge their bets by way of China, just as Xi Jinping positions his nation as the adult in the room. Bloomberg explores this changing dynamic.
there's a phrase which China's President Xi Jinping likes to use. The world is undergoing changes which have not been seen in 100 years.
Now these changes have appeared to arrive, but they're delivered unexpectedly by Donald Trump.
Epic fury. I said, I like that name.
Amid the noise of war, the stance of another major power is speaking volumes.
中方敦促各方立即停止军事行动。
The US is demonstrating itself to be a force for instability in the world. And that gives President Xi and China a chance to present themselves as the adults in the room.
China is happy to see the United States getting bogged down in the Middle East. China has long viewed the existing order as being too dominated by the US, so Trump's challenges to that order actually presents Xi Jinping a very good opportunity, and the question is whether Xi is ready to seize it.
In many ways, he already has.
Trump's first trade war made China realize that dependence on the US is a very dangerous thing. China's exports to the US fell about 20% last year, but in the end, China had a record trade surplus hitting $1.2 trillion US.
China deliberately tried to diversify away from the US as a consumer base.
So, do Trump's actions strengthen China or expose it to more risk it cannot control?
The US-China relationship is the most important bilateral relationship in the world, and it will help define the century.
And it's in the hands of two very different leaders.
It's hard to imagine two people with more different approaches to leadership. President Trump is brash, he's impulsive.
You don't have the cards right now.
Xi Jinping is guarded, methodical, someone who plays the long game, not the Twitter game.
China's policymakers see Trump as someone who's transactional and pragmatic, who likes to make deals. They also realize that Trump is very unpredictable.
President Trump makes a lot of threats. What the markets have realized is that he doesn't execute all of those threats. A lot of them are just quietly forgotten.
And the internet, as usual, has found a name for it.
Taco, as you would call it. Trump always chickens out.
The term is actually pretty popular on Chinese social media too. On Chinese social media, people love Donald Trump. He actually has many nicknames. Another really popular nickname for Trump is 川建国, which actually means Trump, the nation builder.
川建国.
It's not praising Trump as a nation builder for the United States. It's more like Trump helping China to become a superpower.
We're seeing Xi is basically just sitting back to enjoy the benefits as a flurry of Western leaders coming to Beijing.
Mark Carney meets Xi Jinping in Beijing.
It's vital that we build a more sophisticated relationship.
They know that China, like all nation states, will act in its own self-interest. What they are seeking and signaling is a hedge against the United States, which they now view as an unreliable partner.
And China has learned this the hard way.
China was really caught off guard by Trump's first trade war because it was launched just months after his first visit to China, where he received a lavish welcome.
So, since then, it has been preparing itself. In China, there's a famous saying, learning is like sailing upstream. Pause, and you're pushed back. And this mindset now shapes Beijing's strategy in the second trade war.
President Trump tried to deal a knockout blow to China. What the US wasn't expecting was that China would hit back.
China retaliated on the US with tariffs of 125%.
China has learned how to play this game, and President Trump knows that.
This latest headline coming in from the Supreme Court, global tariffs struck down.
China says it is assessing President Trump's second tariff investigation this week as the U.S. continues its effort to rebuild the key trade policy.
The roller coaster has had an impact. Last year, China's exports to the U.S. fell about 20%. But if you look at India, they jumped 12.8%. To Southeast Asian countries, they rose 13.5%. And to the EU, up 8.4%. But trade flows are just one arm of China's strategy.
Explicit export controls on rare earth magnets.
Rare earth materials is the trump card.
China imposed export controls on 7 types of rare earth minerals and magnets made of them. These export controls are really inflicting pain on the U.S. manufacturing base because these rare earth magnets are used in everything from iPhones and EVs to big-ticket weapons like fighter jets and missiles.
The pain goes beyond U.S. manufacturers, since producers around the world are impacted by these controls. And although these measures could backfire as countries explore ways to lessen their reliance on China, those efforts will take time. China dominates the supply chain, mining over 60% of the world's rare earths and refining over 90% of them.
Rare earth by themselves are not big deals. The entire category, the market cap was not even $10 billion. As a result, other countries, they have pretty much given up on rare earth production and refinery process.
China has its own advantages. Its labor cost is really low, and its environmental standards are pretty lax.
The rare earth industry has been considered strategic for decades. China has the world's most complete industrial catalogs.
But despite the trade wins against Trump, China has issues its industrial success can't fix.
Beijing set a GDP growth target of 4.5 to 5% for the year. That's the lowest since 1991.
China's economy has a lot of really serious problems. Local governments, businesses, real estate developers, they borrowed too much. And they used those borrowed funds to build too much capacity. Bridges to nowhere. Steel mills producing more steel than anyone could ever need. Ghost towns of empty property. As a result of that overcapacity, China now has a deflation problem.
For years, China's economic rise has been fueled by its booming exports and investment. But last year, we saw China's fixed asset investment decline for the first time on record. So it's really just the exports that keep the economy going. Chinese workers are seeing their pay cuts or even getting fired and struggling to find jobs. Some of them choose to go into the gig economy, which doesn't really provide a sense of job security.
What a lot of countries realized was that China was actually exporting its deflation overseas. Whatever they couldn't dump to the United States, they were dumping to Southeast Asia, Latin America, or Europe.
That complicates the relationships China is forging, even as more countries engage China to hedge against an unreliable U.S.
China has been keen to exert its economic strength for political influence, but it's not willing to get entangled in military conflicts far from home.
Seizure of Venezuelan President Nicolas Maduro.
Iran continues to attack its Gulf neighbors.
China certainly has never committed to put troops on the ground to defend Venezuela or Iran. There's a lesson there which other friends of China are going to take away from that.
For Iran and Venezuela, China is their most important economic lifeline. But for China, these two countries are ultimately not that important. Iran accounts for about 13 to 40% of China's oil imports, and Venezuela only accounts for 4%. So this is not a small number, but it is replaceable for China. But the bigger problem here is the Strait of Hormuz. If Iran continues to close down the strait, then China will have a problem sourcing nearly half of its oil imports.
The Strait of Hormuz is a vital lifeline for 20% of the world's gas and oil flows. The reduction in traffic increases the threat of an inflation crisis and global recession.
If this war drags on and spreads to other countries, then China's economic interests can be threatened.
So, for now, China seems focused on only fighting the trade war, an arena where it holds more advantages.
The United States is the world's biggest economy. It has the world's most powerful military. Is China quite the equal of the United States? I think the answer on that, at least for now, is still no.
For nations caught in the middle, there's really only one way forward.
Hedging will be the key word for 2026 or 2027. When two superpowers are having this historical fight, they want you to take sides, but no one wants to.
Up next, Rogers versus Tannenbaum. Bloomberg's Ari Alstetter will be here to tell us about the feud between the sports billionaires. Stay with us. The billionaire owners of one of North America's biggest sports empires are locked in a feud. It's over the $3,000 an hour bill that one handed the other for administering his deceased mother's estate. To tell us more about the battle between Edward Rogers and Larry Tannenbaum is Bloomberg's Ari Alstetter, who joins us now. Okay, Ari, it's great to have you. Thanks for joining us. Tell us more about the Edward Rogers complaints about the trustees of his mom's estate. Break down exactly what's happening here.
Right. Well, Edward Rogers' mother, Loretta Ann Rogers, passed away in 2022. And to administer her estate, rather large estate, $250 million, the approximate value at the time of her death, 3 trustees were appointed to essentially, liquidate those assets and see that they get to the beneficiaries of the estate, which are Edward Rogers and his 3 sisters. One of those trustees is Larry Tannenbaum, and recently the 3 trustees submitted the bill for their services. It came out to about $8 million, that's U.S. currency, and just beginning of this month, Edward Rogers filed a formal objection to that bill, essentially saying that it's too much. He objects to the number of hours the 3 trustees say they worked on the case. Thinks it's he called it exorbitant because he says that much of the day-to-day running of those assets are done by the Rogers family office anyway. He also objects to the amount. He worked it out to an hourly rate. How many hours they worked by how much the total bill was, and it comes out to around $3,000 US an hour. And he says that's far more than these people can get doing a normal job. It's far more than we could get if we got an outside trustee to execute the estate, and so we want to pay less.
Such a complicated situation. I mean, what is the background really between Rogers and Tannenbaum?
Well, I mean, Tannenbaum is one of the trustees of Loretta Ann Rogers' estate. They were, friends, Edward Rogers' mother and Larry Tannenbaum, before she passed away. And Edward Rogers and Larry Tannenbaum have been business associates for some years, because, of course, Edward Rogers is active in Rogers Communications, and Rogers Communications is a part owner, a major shareholder of Maple Leaf Sports and Entertainment, which owns the Toronto Maple Leafs, the Toronto Raptors, and some other teams in the Toronto area. The other major owner is Larry Tannenbaum's group, Kilmer Group. And so they've had to work together as part owners of these teams, and now they actually have a major transaction in the works, because Rogers Communications, their plan is to buy out Larry Tannenbaum's, Kilmer's remaining stake in Maple Leaf Sports and Entertainment, so Rogers can take complete control of all those teams of the total group.
Okay, it's a very complicated situation here. We'll have to leave it there because we're basically out of time. That's Bloomberg's Ari Alstetter joining us with a breakdown of what's happening here. Ari, thanks so much. Appreciate it.
Thank you.
And that wraps up this edition of Trading Day. Thanks so much for watching.